Hi, everyone. How are you? Welcome, welcome to our How to Money Summer webinar. It's so great to be here. I'm going to give it just a minute for everybody to join in, and and then we'll get started on our content for the day. We have a really good lineup, so sit down, grab a glass of water, hope you're all comfortable, put in your earphones, and we're going to get started in just a minute. So happy you're here and are taking time out of your busy lives to join us. We're going to get started in just a minute. I'm Sarah from Stash. It's good to see you all. So happy that you're here with us. In just a minute, we're going to get started. Lots of people are still coming in, so I want to give everybody some time. Hi, everyone. Good to see you. I have Brandon here. I also have a light behind me that flickers on and off at our office and staff. So that's a little bit of something exciting.
Got to change
We're
the
going to
light.
take questions. Yeah, we're going to take questions, but we're going to take the questions through the Q&A. So you'll see a Q&A at the bottom of your screen. That's where you'll be asking questions. We'll be responding in real time, and we'll also be taking questions live in the second half of this webinar. So I want to thank you again for coming. We're going to start in just 1 minute. Welcome to all of you. Hope you had a nice day, or you're having a nice day. Really happy you're here with us. All right, Brandon, are you ready to get started?
I am ready. Yes, I'm
Uh,
excited.
all right, let's get the show on the road. All right. Hi, everyone. Thanks for coming to our webinar today, which is part of our How to Money Summer campaign. It's 3 months worth of webinars and activities to help you hit your money goals, plus a sweepstakes where you can win $150 for turning on AutoStash for 3 months. Between now and Labor Day, you'll have to start and attending a webinar. So everyone here, you're already well on your way to eligibility. This is the last webinar of the campaign. I hope you've had a great summer. Again, just go into your app and turn on AutoStash. It can be just a couple dollars a month for 3 consecutive months, and you'll be qualified. I'm Sarah Spagnolo. Thank you so much for joining us. I'm managing editor here at Stash. Thank you again for coming. There's a lot that we need to cover today, right? Firstly, the market's been a jumble all week. It was down first thing Monday, but then it's recovered nearly all of its money. Also, it's still up a lot from the beginning of the year, nearly 12%, which is often hard to remember when the news looks grim. So we're going to talk about that and what you need to know. Also, a lighter topic, a really fun topic, secrets of success. We all know success when we see it, an air of confidence, of impressive ability, a person who has seemingly figured it out, who has reached their goals and is even reaching for more because for them, the sky is the limit. Now, what I described doesn't always come easy. And some people, the people that I admire most, are those that do it themselves, who seek out success, who come into success thanks to hard work, perseverance, and focus and ingenuity. And it's my pleasure to introduce Brandon Krieg to the Stash webinar today. Brandon is co-founder of Stash. Hi, Brandon.
Hey.
He's currently leading our Stash Labs team with some amazing partners focused on innovation in the AI space and what it can do for Stash and other companies too. He's also been in the investing space for nearly 3 decades. Brandon started Stash nearly 9 years ago, and he and his co-founder, Ed Robinson, built it into what it is today. Under his leadership, Stash hit incredible milestones. He raised millions of dollars from investors, and most importantly to him, he built a business that serves millions of customers and all of you. But that's not all. Brandon is a serial entrepreneur. He's successful several times over. Prior to Stash, he was partner and helped start Edge Trade, one of the first and largest agency trade execution and software firms, later acquired by Knight Capital Group. And he served as head of electric execution at Macquarie Securities Group. So yes, Brandon is successful. And guess what? He's also a down-to-earth dad, a husband, a person who came from less and is deeply passionate about helping people like you succeed and achieve your dreams, just like he's achieved his. So Brandon, thank you for being here. Now I'm going to hit you up with some questions to get to the bottom of your secret success. I'll ask you about 10 questions, starting with the state of the stock market, and then we'll open it up to all of you. So as a reminder, use your Q&A function to ask us questions. We'll be moderating, and we'll get to those in the second half of the session. So Brandon, let's start with the stock market news. When someone says to you, what is going on? What do you say?
Yeah, well, first of all, this is awesome. And I'm really, really happy. I haven't done this for a bit, and it's so cool to see just so many people from Stash here. So thank you for coming. And I have to tell you, like, that was a very beautiful intro. I appreciate it. I'm a little modest, but you know, it's after literally, oh, I can't believe you said 3 decades. It hasn't quite been 3 decades, but you know, 25-ish years of doing this that I feel so proud that I get to be in the position to give back and share some of my knowledge that and a lot of the gray hair that I've slowly accumulated over the years. So I just want to say thank you. It means a lot that I get to do this, and thanks for having me here. So on the market, I mean, the market is doing what markets do. Markets don't just go up. Markets can be very emotional, and markets can be fairly erratic, and markets can sometimes be driven by greed. Sometimes markets can be driven by fear. And I've seen so many different types of markets over my career. I mean, I sat down in a trading seat in 1998, and I've been doing it ever since. So I've seen a lot. Specifically, right now, I mean, really, this has been really going on for about a year and a half with the rate increases. We got into a period where, people wanted to see rate cuts about a year and a half ago. Now, any talk of rate cuts makes people think that the economy is weakening, and it brings fear and it scares people. So let's look at this week, because this week has been really volatile. It's been really wild. We started out the week by people saying that there were going to be rate cuts. People looked at the economy and said, we're going to have rate cuts because the economy is softening. And Monday was a really bad day in the market. I think the Dow went down like over 1,000 points. Today, the job numbers came out and they weren't so bad. And the market ripped back up. And Tuesday and Wednesday, since Monday and today, the market's traded up one day and down one day. But during this extreme market turmoil, the Dow is still up, the S&P is still up almost 12% for the year. And this week, after everything that's happened, the market's down just slightly, I believe, below 1 point. And so I think there's a point. The point of all this is that no one can time the market. And the market's going to do what the market's going to do. And I think the key to this is not trying to time it. Like, to be honest, if I knew how to time the market and I had a crystal ball, I would have bought the market on Monday morning and I would have sold it today at the close. And I would have made a ton of money. But that's like impossible. I had no idea what was going to happen. I have always taken the opinion and the view, which is why I helped create AutoStash, that the best way is to do small amounts of money that you can afford, but do them on a regular basis. And so if you were investing on Monday, you would have bought it when it was down. If you were doing it again next Monday, I don't know. Maybe it's down or maybe it's up. And consistency and consistently buying the market allows you to just keep moving right through it. Because, if you look back over the last 50 plus years at the market, and the market, when I refer to the market, I refer to the S&P, it's still up like over 8% annually over the last 50 years. But there's been a lot of really bad years and a lot of really good years. And consistency and continuing to just average right through it is the easiest and most mentally easy way to do it, and not paying attention to all the market minutia. Because if you were doing that, would have been a very emotional week looking at each day.
So is this a good time to invest more money, or should I wait for the market to recover?
I see I get asked that question a lot. I can't tell you when is a good day to buy and when's a bad day to buy. Consistency is the key. So you should enter the market and you should always be investing. And when I say always be investing in a diversified portfolio, either through our managed smart portfolio that we manage for you, or you doing it yourself, but staying diversified. But again, the key is consistency, because I can't tell you after a long time in the market what the market's going to do on any given day, any given week, any given month or period. And by the way, if anyone ever says they can, you should run away, because no one can. But what people can say, and it's been proven, is that consistency and consistent investing over the long term has a greater chance at yielding success. Although we have to keep in mind that, like, I can't guarantee that investing is going to guarantee you returns. And the past performance of the market is no guarantee of the future success of the market. But over time, you just have to look at what's happened. Consistency is the key, because no one can time it. So the answer is you should always be investing. Just do it in small amounts.
We have a question here from Tommy, who's saying he has too much stock in one company. How to diversify? Do you have an answer for that?
Yeah. I mean, if you have too much stock in one company, that you have a lot of exposure to that one company. Another way of saying it is you're putting all of your eggs in one basket. And that is not the best thing to do. So you could do a few things. One, if you go into the Stash app, there's a feature in there that I absolutely love. It's called Diversification Score. And it's going to give you the score of your portfolio, and it's going to give you recommendations because we are an advisor of other things that you can buy to start to give to spread your risk amongst other assets. So it might be bonds, it might be short-term cash, it might be international securities, alternatives to hedge your exposure so you don't have all your money in one single stock. And that's a very scary thing to do because you can wake up tomorrow and the stock could be cut in half. It could have bad earnings. It also have good earnings, right? I don't know. But it's best to spread out your risk, especially when you're doing this for the long term and you're going to need that money later.
How much money? I have an anonymous attendee saying, how much money is too much with any one company? I think the suggestion here is again to look at your diversification score and to see what that tells you, right?
Yeah, there's the diversification score and stash is really good at helping you decide how much to put in every category. The categories again are like US companies is a category, international is a category, bonds is a category, short-term cash is a category, and there's a few others in there. And really spreading out your risk. So if you're going to put lots of money, that's great. Just do it across the categories so that you have a diversified risk-adjusted portfolio. If you have stash manager money through Smart Portfolio, which you can do both, by the way, you can invest on your own and use Smart at the same time. It's going to do that work for you by deciding how much money to allocate to each one of the kind of risk-adjusted buckets.
So here Joel is asking a related question, and then we're going to kind of move to your story, Brandon, and we'll come back to some of these questions. But what are the reasons you shouldn't invest?
Well, there's a few things. If you have, well, everybody should have an emergency fund. That's first and foremost. I think it's really important. I was one of the first things that when I started getting my proverbial I can't curse on a live feed, but together in my life, the first thing I did is I said, I need to have a certain amount of money put aside. If I lose my job, if something happens to me, or like, I just need to have some emergency money. That money, if you decide to put it into the market, it should go into something that is incredibly conservative, but it's always best to keep it in cash. We tell people to just keep it in your stash bank account and just let it sit there. If you don't think you're going to need it right away and it's like emergency for an emergency, then you could put it in like there's short-term, US bond funds you could put it in that earn some more interest, but keep it really conservative. And it's all about your risk, right? If you're thinking long-term, then building a portfolio, again, that's diversified for the long term is the right thing to do. If you're thinking about cash that you're going to need like tomorrow, like there's not a huge point in investing it for one day, right? But I think like many people should be investing. It's really thinking about your risk, but also the emergency fund is the one thing I tell people to make sure it's there for you when you need it. And most importantly, to have one.
Great advice. All right. So quickly, Brandon, in a short summary, can you talk about your journey to Stash, and then we'll get some of your tips for success after that?
Yeah. I mean, I'm going to assume my father is not on this Zoom right now because he's very private. But I grew up in a great home with my parents, and my dad had lost his job, and my parents were not savers. They never saved anything. It was like make it, spend it, make it, spend it. And we went from being pretty, I'd say like middle class family to like really having a very hard time. My parents had no money, and they were both out of work, and I eventually moved to New York, and I got just an amazing opportunity to sit in a business that was just getting going with two incredible guys. And I wanted to really learn from the mistakes of my father, to be quite frank. And I'm very close to my dad, but we talked about it a lot. It's like I didn't want to be in a position in my life. And now, later as I got older, I have a family now where, things happen in life. And I always thought about maybe I'm a little conservative from this point of view, but how do I start to think about having savings? And so as I started building out my career, I helped start a company called Edge Trade, which was one of the first algorithmic trading businesses on Wall Street. We used to compete against the big brokerage firms. And our business was to help professional investors like hedge funds and mutual funds execute their trades into the market the most efficient way they can. And eventually that business that I helped start was acquired. And we went into this company called Knight, which was incredible. Knight was one of the largest trading firms in the US. We were trading on some days like 25% of the US stock market volume. It was an incredible thing to see. And I'm so proud that I was part of that. But along the way, I've learned a lot of money lessons for myself because I have had the blessing of having so many smart people in my life. And I would always ask a lot of questions. And the real question is, one of the things I've learned is one, pay yourself first. That's like the number one thing that I think I've learned in my, personal life is I treat myself like a bill. And if my expenses are high, maybe my bill that month is a little lower, and I pay myself. And when I get paid, I'll take a little bit of it and I'll put it away. And that's me paying myself because I owe that to myself. Because the truth is that there was no one else looking out for me. I have to do that for myself. And I learned that, unfortunately, in my young 20s is like, I couldn't go call my dad and be like, my dad and mom, be like, hey, I can't pay my rent this month. And like, can you send me like a couple grand? And I've had a lot of friends like that. And I used to get really pissed off about it because I couldn't call my parents for money when my friends would be like, hey, I want to, take a trip, and they call their parents and get their credit card. And so for me, I had to learn very quickly that for me to do that for myself, I'm going to have to treat myself like a bill and start setting it up. And a lot of that thinking went into Stash, helping you have a place that you could bank and invest and save and start putting money away, even if it's small, like $1, $2 at a time, because it adds up. And I want people to do what I did, which is to start to train that habit, which is a super, super positive habit, right? There is nothing wrong with you saving money for yourself and your family. Like, there are a lot of bad things that I've done. I have a lot of vices like everybody. One good habit I think I have, and a lot of it just comes from my upbringing, which is, I love my dad, but I want to make sure that if I lose my job, if something bad happens, if I need to help out a family member, that I can do that. And the only way to do that is by practicing the art of saving and long-term focused investing. I could go on about
That's
this forever, but I'll stop there.
That's a great answer. And it did parlay to my next question, which is what are some of the smartest things the successful founders and investors that do in relation to money and personal wealth? So if you have other suggestions other than pay yourself first, I want to hear them. But secondly, and I want to hear about budgeting. So that, we talk about this a lot here at Stash, which is it's a skill. And I'm curious, once you've paid yourself first, how you think about budgeting, how you get the money to pay yourself first. Do you have a family budget? What does that look like for you in your life?
Yeah. I mean, I have had the pleasure of meeting so many incredible money managers and hedge fund managers, both like long-term investors, short-term traders. I've like met so many people over the years. And I think one thing that I have figured out is that a lot of people don't chase returns. The consistency of long-term investing, of putting money in our managed smart account, which is what a lot of wealthy people have, which is a managed account, or investing in, the S&P, which is like match the market on Stash, or just not chasing returns, just taking that long view and putting money away on a consistent basis and kind of ignoring the daily ebbs and flows of the market. Because the truth is, it'll make you crazy. It will. If you're staring at it every day, going, oh my God, the market's up today. Tomorrow, oh my God, the market's down today. That's not healthy. What I've always said to people, what people said to me is focus on doing great work, focus on learning and learning a new skill and focusing on advancing your career or finding a new job that will pay you more, and just let your money work and let it work consistently over the long term. And that's the advice I've been given. And that's the advice I try to follow. At least I've been following it since 98.
I read an amazing stat yesterday, which said that the stock market has risen 12 out of the last 15 decades, but it also tends to fall on about 46% of all trading days. So if you were paying attention, like you're saying not to, by the way, then half of the time it would be down. But in fact, it's been up if you take the long-term view. So that's
Totally.
exactly what you're saying here.
I think about this
All right.
like because I think it's relevant. Like if I just ramble off a few things that I think I can remember quickly, like the dot-com crash. I don't know how many people are my age on this call, but if you remember it, you remember it. That was a calamity in the market. I've invested and traded through two, three, multiple wars at this point, multiple presidents. The Great Recession, COVID. Remember COVID, anyone who was in the market then, the start of COVID, the market was literally collapsing. And me personally and many, many stashers kept auto stashing right through it. And just every week, every 2 weeks, whatever you can afford, small amounts, just keep going right through it. I can go on. There are so many more things I've seen. So one day I'm going to look back at it and go, okay, because I remember during the dot-com, during the Great Recession in '09, people didn't know if the banks were going to have cash in them at the end of the day. And I just kept going through it. And I look back at it now. I'm like, wow, I was really smart. But was I? I just followed the system and just kept going through it. And that's it. And I'm going to keep going. And that's it.
Brandon, I want you to get back to the budgeting question, but first, Christina asked a question, which I think is important, which is your story is very reminiscent of my own story as well. How did you learn to not just earn all the money and create savings, but also balance and enjoy what you've worked hard for without sacrificing savings? So maybe that's connected to the budgeting question also.
Yeah. So I have a few things I did with that because look, when I was in my 20s, I live in New York City. I was living in New York City. I was single. I was a little crazy. So I'd go out, my friends and spend money. And then like when I look at my bank account, I'd be like, damn, like this is not good. Like I spent too much money this week, or I didn't follow my own principles. Like, so I started doing a few things. One, there were these online savings accounts. When I followed that system of pay myself first, I was moving the money there because it would take me a couple of days to get the money back if I needed it. And what that forced me to do is to start thinking about these decisions I made. I don't know. I had this thing with TVs when I was younger. I loved TVs. Like, I don't know. Now I've changed my TV whenever I like it breaks, but I like the new model. I don't know why. I did. And like if I went into Best Buy, I'd be like, oh my God, I'm getting a TV. I'd be like, damn, the money for the TV. So like in this account, it's going to take me a few days to get the money. And it forced me to think about it. There were times that actually go, yeah, I'm going to do it. I'd go in, I'd initiate a transfer, I'd come back to my bank. By the time I got back, I'd be like, I don't really need that TV. I'm going to send the money back. And I think that discipline was, look, I like to have fun. I like to enjoy myself. But I also, as I've gotten older, I've realized that there are so many dumb things I've done with money. Okay, that's in the past. There's nothing I could do to change that. I have to look forward. And I think falling back on almost like a code or a set of principles that I have with money, which is I want to have fun. I want my family and my children to be raised the best I can raise them. And I want them to have happiness, and money doesn't always bring happiness. At the same time, I make sure that I follow my consistent system. And now that I have kids, I also have to maybe, the money I pay myself has gone down a little bit. I took a pay cut because I move money into my kids' stash custodial accounts now every week. And I'm buying them the market and consistently investing for them now because they're young. And over time, I want to make sure that I have money there later for college and all the things that they're going to need to do later. I'd like to help set them up. The truth is, I wasn't set up. Again, I love my parents. If my dad happens to be on here, I love you. And you might call me later and yell at me, but he didn't have anything to give me and he regrets it. But I'm trying to make changes in my own life to change that for my kids.
So this webinar is called Secrets of Success. Do you feel successful? And was there a time where you felt like, yes, like I've made it. This is where I want to be. How do you measure that? And is it with returns? Even when you said that the wealthy people that aren't chasing them, how does that kind of work for you?
I don't know. Do I probably the answer is no, because I think about it is, do I love what I do? And I love what I do. And like I am so proud of Stash. I mean, I'm proud of everything I've done. Stash to me is like the proudest thing and that I've ever done in my life. And I know my co-founder Ed feels the same way. I know Liza feels the same way. Like people that work at Stash feel the same way. Like it is a really, really important company that is truly helping people. To me, that is really incredible. Look, I get paid at Stash. I'm working here. I deserve to be paid to work here. But at the same time, like I've never seen anything where you can do well and do good at the same time. You could actually help people because most people in this country don't have anyone to turn to ask money questions. They can't go to an advisor and they're not learning about this stuff at home and they're not learning about this stuff at school. By the way, that's me when I was younger. And so to be able to bring a platform that actually helps people learn about money, but actually do it at the same time is incredible. It's not like we built a blog and we're like, here, read this, 10,000 word essay and you should remember all of it and then go do it after. It's you can learn and do at the same time. And that to me is very, very powerful. So do I feel successful? Maybe I do. I don't know. I don't think that way though. I just keep moving and I'm happy to move forward and keep doing cool stuff that's interesting. And if I could do it where I help people at the same time, that's good. That's real good.
It is amazing. I too feel proud every day to be working here. And thank you. I want to thank everybody again for joining us this evening. Brandon, in all these years of investing, what are the things most people don't know and should?
That no one can time the market. There's just so many, I've seen so many things and like, it's investing isn't gambling, you know, throwing all your money on a hot stock tip. I don't know. I don't even know how to respond to that when people ask me. It's just, it's something people bring up a lot. It's like, I don't know what the market's going to do. Listen, I love what I do. If I could pick every stock that's going to go up and down, maybe I'd be doing this from like a G5 right now, flying to Greece to sit on the beach, but that's just not a reality. And I think like taking again, I'm very consistent with this. Consistency in investing is just the way to do this. It's timing the market and being able to predict a stock and treating it like gambling are all just they're bad habits. They're the things of movies. And I don't think that fast money, I'm sure there are people out there who are really good at this, maybe, but they're an anomaly. You know, if you're focusing on your job and doing a good job, like how are you going to look at the stock market? Like day trading has been proven to be consistently a money loser for people over the long run. And I've never met a day trader in my 27, 28 years of doing this that consistently can yield returns every year over and over again without some really hard years in between. And it takes a lot of risk.
So I think that's probably the answer to Abby, who wrote in to say, what advice do you have for someone who's 36 years old, who grew up supporting themselves and was in survival mode until just recently and started investing over the past 2 years? She said, I'm far behind, but I've kept myself out of debt so far. What advice would you give for me? So I think that's really what you were just articulating, right?
Yeah. And then what was the person's name?
Abby.
Abby, I'm really proud of you, to be honest. Like you doing this, you being here with us tonight, like you taking these steps in your life to do that. It doesn't matter if you started at 40 or you started at 20, you're doing it now. And so you doing that is awesome. And I think you taking the steps and continuing to take the steps, just be consistent about it. Don't stress out over the amount. Just do what you can afford, but just keep doing it. And, look, I can't guarantee that the market's going to go up every year. I can't, I just can't. But you're still saving and you're still practicing the art of saving and investing. And I think that's awesome. And you can get there. Just focus on it. And you're doing it now. So congrats. I'm really happy to hear this. This is great.
I agree. Abby, thanks for joining us and for all the good work. Maria has a good question. I'm curious how you're going to respond to this, Brandon. How can you be aware of the tendencies of the market? Are there any signs we should be aware of?
Look, I mean, I I like to read the market news. I go to Yahoo Finance in the morning and I like to just skim the headlines and read them. I like to read Bloomberg, the daily like newsletter because I don't have a lot of time. They do like three bullets at the top of the newsletter so I can kind of just take it in. So I think you should pay attention to what's going on. A, because you should learn and be aware, and I think it's good. Every time you read this kind of stuff, you might pick up on a term you don't know and you can go learn it. And it's continuous education. But the tendencies of the market are very unpredictable. The market will do what you sometimes don't think it will do. It'll do the opposite. Like you might be like, I know the market's going up, and you wake up and the market went down. You're like, oh, I know the market's going down today. And you go at the end of the day, the market's up. It's very, very hard. So in the short term, the tendencies are very tough and impossible to predict. I look out over the long term. And for me, again, it's like I definitely at times will buy some stocks, but I do it in a well-rounded, diversified portfolio. So I do not believe, and I don't do it with my own money. I don't put all my eggs in one basket. I do not want to wake up one day and be like, wow, I picked wrong. If one of the things I own goes down, I want to make sure it's balanced with lots of other investments. So for me, I do read and learn, but I can't pick the short-term tendencies. I'm not good at that. I don't think anyone is.
So, related to that question, we have two others, which is Stephen asking, before investing, what are the things that you consider? And also, I don't remember the person's name and I can't find it right now, but somebody asked about reading stock charts and how you do that and how to learn. So, can
Yeah.
you talk about the work that you put in before you make an investment if you decide to do so?
Yeah. I like to see people, I said this earlier, but maybe a lot of new people join. Like, I like to see people have an emergency fund. I think it's important because, look, markets go up and down. If you're investing over the long term, like, I hate when I have to see people sell off their investments. And I like to see people practice the art of having an emergency fund because I just think it's really important. B, and you're starting to like create a really positive habit. And I think that's awesome. So that's point one. As far as like, things you should do is know what your goals are. Like, what is it? Why are you doing this? Right? Like, you should understand like what you want out of it. When I started investing, I wanted to do it for financial security for myself. And I was thinking about my budget because we didn't talk about budgeting yet, but I think we will. Is like I allocated a certain amount of money that I was investing because thought I would need it later. I took advantage of my first company startup. We had a unmatched a retirement account, unmatched 401k. So I couldn't afford a lot of my paycheck, but I put a little bit of my paycheck in there. I think if it was matched, I would have put max. I would have maxed it. I probably would have had more money now, but it wasn't maxed, so I put a little. Um, and then I put money into my emergency fund, and then I put money into a savings account that I kept. And those are the things that I did because I knew what I wanted, right? I had an idea. But here's the thing, what I wanted changed a lot as I've gotten older. So as I started getting older, I'm like, I really don't want to rent anymore. I want to own. I don't want to be a renter. So some of my priorities changed, and I came up with a plan in my mind of like when that would be. And I didn't make a spur of the moment decision. I said, okay, I'm gonna want to like own a home. I'm gonna do it like I think I said like 5 years. So I did start investing in a very diversified portfolio. It was like heavy in the like match the market in the S&P. And I just because I knew I was going to go through some cycles in the market and I had a 5 year time horizon. So I just started doing it in that. Eventually, when I needed to do it, I had the money and I did sell it. And I'm feel really happy I did it because I used that as part of my down payment. So my answer is you really got to think about what you want. What are your time horizons? And then how can you allocate the money that you can afford across those different things? And that's one of the magic things of Stash is that we use fractional shares. So we tried to make it easy so you can, even if it's just a few bucks, you can allocate it across the different things that you care about and need to do.
We're going to change gears a little bit. Somebody
Yeah.
asked how you came up with the name Stash.
Yeah, we were sitting at our desk, me and my Australian co-founder, and we were just going on GoDaddy, finding domain names because we kind of knew what we wanted to do. We had talked to enough people about the idea of Stash, and people got very excited about it. So, and the people we were talking to, I was just going up to strangers on the street in New York City, asking them money questions. So that's how it kind of came up with the idea of Stash. I was just Googling, and my co-founder goes, "Wow, Stash." I was like, "Holy, that's a good name." And then we went to Google and stash.com was taken. So we're like, damn. So Stash was stashinvest.com for a very long time. And then during COVID, we were able to buy our actual domain name finally. And yeah, so Stash was invented by the name came up from my co-founder, but it's a really good name. I love the name.
I agree. Carlos is asking a little bit of a similar question, which is about the business model, right? Like, how do you charge and what does it look like for transaction fees and brokerage commissions, and how is Stash different?
Yeah. So when we started it, I really wanted to like make it super transparent. And the way to do that, and look, for us, free was an option because we didn't build a day trading app and we're not trying to get you to trade a lot. Over trading your account is not a good thing. We wanted to help people build financial education, build an advice framework, employ people that were world class at giving out advice and building software that could really help. And to do that and to align our business with the customer's needs, we decided to make it a subscription business. So people will pay a subscription fee. Then we don't have to hard charge trading fees. We don't have to charge overdraft fees or any kind of hidden fees. Everything's very transparent. And I feel very good about that. So there are no trading fees. We're not trying to get you to trade as much as you can so we can get, revenue from payment for order flow from the back. I mean, we do make, I think Stash gets a little, but it's not the business model. Like we're not trying to get you to trade. Our goal is to get you to consistently invest and just do it on a regular basis. And so the business model, it's been around for a long time now. It's working well. And I think it really resonates with people because you know what you're getting and you know what you're paying.
Yeah, I agree. And for everybody, I'm taking questions from you now. So if you have questions, please share them in the Q&A. We're moderating and I'm pulling them out. We're going to answer some we have some people here from customer service here who are answering questions, and I'll ask Brandon some. So continue to do that for our next 10 minutes until the webinar wraps up. So, all right, back to it. Brandon, somebody asked about the future of Stash, which is related to a question that I had for you, which is, how do you think AI is going to change investing?
Yeah, I don't think it's going to change investing. I think it's going to change access. And I'm very, very excited about that word access. Right now, unfortunately, to get to talk to a money manager, to like a money manager that is like really good and the person like really knows this stuff, has a lot of experience. A lot of those people, they're out there. They have a minimum asset size of like normally like call it like around $3 million. So call it $1 to like $3 million to get an account and to get them to start calling. But they're really focused on the people that have $100 million. And that doesn't work for me. And so Stash has been delivering on this. But when we started, a very senior engineer at Stash, Joel Parrish, and I have been focused on this for almost a year now, starting to actually build a model that is trained in how we think about investing and saving and money matters at Stash. And we're starting to roll it out very slowly right now. And the feedback has been incredible. So you can actually have a very comprehensive conversation with our system, and it has empathy and understanding and actually can give you advice, hopefully, and we'll keep getting better and better and better over time. So when I say like it's not going to change investing, I don't think it's going to change I'm not sure right now AI is ready to do stock picking for you, but to have someone to talk to about money, to ask questions, to get some answers with some different perspective, that's very exciting to me. And that's what we're focused on right now. So we're going to keep working on that and keep adding more and more to it. And over the course of the coming months, hopefully everyone at Stash has access to the stuff that we're building.
Thank you. We are super excited about that. That's for sure. All right. Let's see. Let me just scrolling here. Do you have thoughts on limiting the number of stock positions that you should have in your portfolio? And a couple of people asked this a few different ways, which is like how to think about your total number of investments and to understand when you have enough or you need more. How do you respond to that?
Yeah. I mean, look, I would go to the diversification analysis and score tool on the app, because it's really good at giving you a view of your portfolio according to how Stash deems you to be your risk level. So if you're scored as like a moderate risk taker, and that's really based off of your age and your income and your net worth and that's the information you give Stash when you sign up, then it's going to give you an idea of like where we think your target should be. And targets meaning what percentage of your assets should be in foreign versus US companies versus bonds. And I think that's really, it's hard for me to say how much. I personally don't like to see any portfolio more than like 2 to 5% of your overall holdings, because I don't want to see people put all their eggs in one basket, especially when they're long-term investing. One of the places and one of the most popular places people invest on Stash is Smart Portfolio. Smart Portfolio is our managed account again, and it's going to pick, I believe it picks like 5 or 6 ETFs, and that's the portfolio. Underlying those ETFs are thousands and thousands of stocks and bonds from all around the world, but they're just packaged up into ETF form. So Smart really buys, I think it's 5 or 6 right now, ETFs, and it decides the allocation of the total money you put in across those different investments. So it's not really about, it's really around spreading your risk amongst lots of asset classes. So if you said I should buy 5,000 stocks, I'd say, why? Just buy one ETF, right? ETFs are great if you want to get exposure to a sector or an industry or a country or something specific. And Stash has lots of ETFs. You can search for them in the app. My guidance to people is just make sure you do that as part of a diversified portfolio.
Right. And one thing just to add is that Stash removes the jargon from the ETF name. So it'll be very easy for you to search for ETFs in the sectors or industries that you're interested in, because we clarify and make that really clear, which is one of my favorite parts about Stash, that's for sure.
Really.
Brandon, related to you and how you grew up and how you talk about money now, you're a dad, you have 3 kids, right? So Freya's asking any advice on convincing my children into investing for their future. So she must have older children, but how do you think about talking to your kids about money? Do you give them, your kids are a little bit younger, do you give them an allowance? Like, how has that looked for you? And what is your recommendation for Freya, who wants to help her children think about investing?
Yeah. Well, I have a new thing I'm doing, and then I'll give you the main thing that I do with my kids. But
Okay.
my kids living, I don't know if it's a New York thing or what it is. My two of my kids are getting a little older. They've been dropping the F-bomb and cursing a little bit. So I make them pay for a curse now. So I have a curse jar. They have to pay for it. And they get a little allowance every week. They have to give the allowance back. And I take the curse jar money and I invest it into their custodial accounts. So if they're going to curse, at least they're going to invest when they curse. But what I've done with my kids, and look, everyone's thinks about this different, is I made Stash one of my main bank accounts, and I get stock back every time I spend. So stock back is the feature that we use at Stash where we give you a reward of stock every time you spend money. And if the company is public, you get that stock. So if you spend it I don't know, like Walmart or Disney or whatever, you get that stock. If you spend it at a local deli or a company that's not public or it's not available on Stash, you get a default. And so I show my kids every time I get stock back. And I got them interested in that now. So I happen to like the company Tesla because I drive a Tesla. So it's not a recommendation. I'm just happen to invest in something that I know. And so when I charge a Tesla, I'll get stock back and I'll show my kids. So now when I'm driving around, my kids will point to a Tesla going, I own that company. Or, my kid, it doesn't matter. Just pick a thing that they like. If we get a coffee at a different coffee place that's public, they will call it out now. And I think it's so cool. And for me, that's a sense of learning that they can own the world around them. Because I want my kids to think like owners, not like renters. And Stockback has helped with that. So that's one tip I have. But really, it's also they get a very small allowance and I want them to invest it. So again, my parents didn't do this for me. So it's something that I want to try to change. And I try to spend time. And I use Stockback to do that with my kids. That's how we do it.
Right. That's awesome advice. Brandon, we're nearly at time. Do you have any last words of wisdom for everyone before I take us home?
No, but I've loved the questions, and I'm so happy that again I get to do this. And yeah, just keep on stashing and just take the long view. But I appreciate it. This has been great. Thank you, Sarah,
Okay, awesome. Well, thank you to everyone who joined this webinar tonight. The information we shared today is purely educational. We're not providing any financial, legal, tax, or investment advice. As a reminder, everyone who registers for at least one webinar this summer and turns on Auto Stash or already has it turned on and automatically invests in themselves for 3 consecutive months starting before Labor Day is entered to win $150. Stay tuned for details on our next webinar, and thanks so much for participating in How to Money Summer. Thank you, Brandon, for being here, and thank you all for joining us today. We'll be sure to be back soon. I hope you have a wonderful day.